Welcome back to Instables, everyone. Again, going over our intraday and swing trade perspective here. Again, leading into Powell on Tuesday. The question is, are we going to continue on with this momentum as we are jumping over our 20-day moving average, or will we possibly lose momentum as our 20 days crossing below our 50? That is the question. Again, leading into Powell on Tuesday, and on Thursday, we have CPI, looking to see if we will continue on with that inflation to the downside, or if we will possibly consolidate within inflation. I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy. Subscribe if you're new to the channel. Let's jump into this one. So jumping into the daily chart with you guys here on the SPY, again, closing up 1% on the week, as you guys can see, on a major spike that we had on Friday after non-farm payrolls. Our question is, will we continue here as we jump over our 20, and we are dropping with our 20 below our 50? In my opinion, what we are looking for here is to look to see if we will possibly continue on with bearish momentum as we are still below our channel. We just got our rejection, again, when Powell mentioned that unemployment wasn't exactly as high as we were looking for. So again, we're sitting on that pullback after anticipation of that possible Fed pivot from Nick Timiraos, mentioning that possible Fed pivot, and again, getting a pullback here, now sitting on that possible intraday gap up from our gap down that we have here. As you guys can see on the 4-hour chart, again, mentioning yesterday the same thing on the 4-hour chart. As you guys can see, we are pushing into our prior gap down. In my opinion, we possibly will test our 393 level. Again, 393 is our next level to the upside if we're looking for, again, that possible rejection to the upside. And the reason why I say that is because if we're looking at our VPVR, our volume profile, showing us the most amount of volume that was traded on the daily time frame here, we have our next largest peak here showing us that resistance. So again, 393 will be that possible rejection, and that also is the upper end of our gap down that we had here. So again, keeping in mind, we do have our possible gap filler intraday, but not exactly expecting major continuations to the upside till we get that proof of concept. And again, that proof of concept would be looking to see if we can break above the upper end of our channel with, again, that spike, looking for that possible pullback, and then that proof of concept with an engulfing candle showing us that we are clearly respecting the upper end of our channel. As you guys can see, multiple times we have been getting rejected on the upper end of our channel. So again, that is what we're trying to avoid here, making sure that we don't continue on with this rejection on a major sell-off. The reason why we have that possible chance of a major sell-off, if we're looking at the dollar here, as you guys can see, again, we have our EMA lines that are pointing up. We do have this increase in buy pressure that we had, again, on Thursday. Then we had this white shaded line coming out as we had, again, non-farm payrolls coming out. So again, that decrease in strength on the dollar because of non-farm payrolls. Now looking to see if we will possibly increase in strength. If we continue on with increases in buy pressure here, in my opinion, then we can confirm more strength here. And again, that will mean a lot of weakness on the S&P, on the SPY. And with our EMA lines, our 12 holding still over our 26, showing us that we could continue. I definitely would just still be careful, looking to see if we will possibly continue on with that bearish momentum on the overall time frames here. Will be plausible until we do get that proof of concept again on the upper end of our channel. Now, the reason why we have that possible strength to gap into our prior gap down is because, as you guys can see on our MACD here with our 12 and our 26, we are practically crossing higher here with our 12 and our 26, showing us that we could possibly continue on with this short-term momentum. And then from here, since we do have our EMA lines below the median of MACD, we will be looking to see if we will possibly cross lower, continue on lower with our 12 and our 26. Again, if our 12 crosses over our 26, and overall we are going to have this possible recession that may come, we are looking to see if we would possibly cross back lower since we are below the median of our MACD. Again, one thing to keep in mind is, since we are leading into Powell on Tuesday and we're leading into CPI on Thursday, that we could possibly continue on lower here with our EMA lines very easily. And the reason why is because, as you guys can see, prior we had data coming out, we almost looked like we were going to continue on lower. We did not. We almost continued on lower here, but however, again, data came out, giving us that rejection, having a spike here. So again, making sure that we do not get that same scenario to the downside here with Powell speaking on Tuesday. And again, with any increases in inflation, we very much could get a major pullback based on that, since we have been anticipating that possible continuation with decreases in inflation. Again, our last couple CPIs continuing on lower, looking for that possible continuation, and the markets will be anticipating that. And again, we could possibly even test the upper end of our channel one last time. We'll see exactly what happens. But again, the last thing that we want to do is play too strong to the upside when we haven't got any proof of concept here for quite a while. So again, just staying cautious. Now, again, with that said, if you are a day trader, if you're looking for very volatile breakouts, we mention them every single day in the Instable Zoom. Check out our videos throughout this last week. We've mentioned exactly how we've confirmed major breakouts over 200%, over 500% that we had earlier this week in the Instable Zoom. Again, if you guys do want to see these major breakouts, go to instables.com in the description below. For only $15 a month, you will never miss a breakout alert today again. And all of you instables, I appreciate you guys going at it. I'm going to go over the market again tomorrow, show you guys exactly what we're looking for on the larger time frames leading into the smaller time frames, so that way we get the overall picture as always. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.